never stops, making moves, set the plot. What we do, never lose, heading straight to the top.
What's going on, everybody? Welcome to Money Talks Podcast. It's your host, Eric Lubano. I'm here with Luis Vargas, David Medina. And today, on this episode, we're just going to talk real estate, right? Talk where the market's at, talk where we think it's going to go, and try to give as much value as possible to anybody listening that wants to get involved in real estate, right? But just doesn't know how, or somebody that's maybe already involved, right? They're currently fixing, flipping, right? Or they're just getting started, and we're going to talk about maybe like the market conditions and see what we're doing, what our investment strategy is currently right now, right. What we're up to. So it's open mic. I mean, you guys want to start off?
Yeah, actually, my brother actually just reached out to me and wanted to know some info on anyone that doesn't know anything about real estate and wants to learn about flipping. My brother's trying to get into flipping, so I thought this was a great opportunity to interview you. Let's ask you some questions on flipping. So if you don't mind going into how you got started, when it was, and just walk us through your journey that's led you to now.
So I got into the mortgage industry in 2007. So that's kind of how I got into the whole real estate industry. Timing. Yeah, 2007 at the peak of the market. For those that don't know, 2008 there was a real estate market crash. But this was right out of high school. 2006 I graduated. 2007 I got into the mortgage industry. I did well as a 19-year-old. My first year, and like I said, it was at the peak. 2008 the market crashed. I've rode the wave all the way to now. I believe that we've hit the peak. I want to say 2023. I think 2024, in my opinion, I think it's shifting. But anyways, this is a first full cycle. But anyways, in 2014 is when I started to do my first investment on my own. That's when I got into the fix and flip game.
So what happened between 2007 and 2014?
So 2008 and all the way up to 2010, I did what's called loan modifications.
Still within real estate? Still
within real estate, still within mortgages, I should say. So in 2008, when the market crashed, lending froze. There was not a lot of lending going on, and a lot of foreclosures, right? So loan modifications became very popular at the time, meaning for those that were losing their properties, we would help them modify their existing loans, right? In order for them to not go into foreclosure.
Keep it.
Right? So I did that for, about two and a half years. 2010 is when I got into multifamily real estate in downtown LA. From a salesperson side. So I did multifamily for a little bit. 2011, I also simultaneously started another business. We scaled that, sold it after 10 years. But in between there, 2014 is when I was able to do my first flip.
Gotcha. And you always give advice on your first flip. What's the famous thing or common thing you always say? You say you're either going to pay a teacher or you're going to pay for it in lessons.
It's when it comes to flipping, whether you want to or not, you're gonna pay. You're gonna end up spending money. So you're either gonna end up spending money by paying somebody, hiring somebody, a coach, or you're gonna spend money by losing money.
By making mistakes.
Exactly.
Gotcha.
So that's why in my 10 years as an investor. And 14 plus years as in the industry, I always recommend anybody that's looking to get into the fix and flip business to always partner up with somebody in the beginning. And I would say for at least several projects to get a lot of experience under your belt, because you will spend money, and that, like I said, it's either hiring somebody or you're going to end up losing money.
So tell me about your first flip. Did you partner with someone or did you lose money?
No. So fortunately for the first flip, I did not lose money, but when I say the first, I'm talking about your first 5 flips, you're eventually going to lose money.
Okay.
So you may get lucky on your first one. Also, the market has a lot to do with it.
For sure.
So anybody with no experience can make money on the upside, on the upswing market.
Right.
But my first deal was in Hesperia. Yeah. So in Hesperia, actually one of the it was a wholesaler who sold me the deal from New Western Acquisition.
Okay.
Yeah. So anyways, got this deal in Hesperia for $75,000. Mind you, I'm in LA. So it's about an hour commute or so with traffic, or
Probably
even more
more.
so. No experience. Wasn't even looking to invest into real estate. I just kind of, got sold the idea to make money and flip. Anyways,
That was at a time Hesperia was like, I mean, Hesperia is nothing now, but that was at a time where it was like really like
yeah,
butt fuck nowhere, bro.
it really was.
Yeah.
Yeah, Hesperia, Victorville, all those areas was, and again, we're coming from a time where there was a lot of foreclosures, just maybe like 4 or 5 years prior. So a lot of the outskirts, tertiary markets out of LA or metro cities, right? These areas had been hit hard, the hardest. So, Palmdale, Lancaster, Fontana, Hesperia, Victorville, all these areas are not what they are today, right? In 2024. Back then, they were barely, building and people barely moving out there.
Yeah.
A lot of people that were living out there, they were still commuting to the inner cities, right, for work.
Right.
So anyways, bought this property for $75,000. Got lucky, hired some guy from Craigslist.
No way. No way, bro.
Wow.
From Craigslist.
That's how you lose money.
Once again, you don't know what you don't know, right?
Yeah.
Yeah.
So this is why it's important that you partner up with somebody in the beginning. If you're not learning or taking courses, or you don't know what you don't know.
Right, right.
So hired a contract or handyman. It wasn't even a contract; it was a handyman. Luckily, he was able to do what I asked him to do. Which this is the other funny part. He asked me, "So what do you want me to do?" And again, no experience, no knowledge. I said, "Well, do what you got to do."
How did you make money on this?
let me interrupt you. What condition was the house in for $75K?
You know what? The property was not distressed, fully.
Okay.
Meaning it just needed to be upgraded.
Got it. So your
Right.
plan was buy it, just little renovations, paint, floor, maybe kitchen, bathroom?
Correct. So, I mean, for
Even
lack
that
of
far.
better word, if I had a plan, again, sometimes I've gotten to where I've gotten just by pulling the trigger.
Yeah.
And sometimes, it pays off, and sometimes, it doesn't. But that's just kind of, that's my personality. So when I pulled the trigger on this, again, I didn't have a plan. And so when I hired the handyman to do this, the guy's asking me, "So what do you want me to do?" I paint, tile, cabinets. I have no experience. And I tell him, "Well, do what you got to do." And the guy's, "Well, what do you want me to do?" Long story short, it ended up working out. We sold it for like $115. I think I made like $8,000 or something like that, maybe 10 grand or something like that.
Nice.
Right. So, but it was more about the experience.
For sure.
Right. And really what hooked me about it is that I wanted to be an architect when I was younger. So the fact that I was able to kind of be part of the design, so to speak, right? That is kind of what hooked me into it. And then secondly was, obviously the profits. But to take a property that was, distressed, it needed work, and all of a sudden, make it nice, design it, the color that I wanted, the cabinets, etc., and then sell it for a profit, that's kind of, I was hooked at that point. So that was my first experience with fix and flips.
Got it. And I'm just curious, have you looked into what that property is worth now?
Oh my God. I
450?
believe they're going for about 400,000 now in that area. So I bought it for 75. It's probably worth 400,000 plus or minus now.
Yeah.
And that's kind of the thing as well with real estate is that, there's a saying that says, don't wait for real estate. Don't wait to buy real estate and wait.
Right.
Yeah. So, properties always appreciate in value. If you look at the history of real estate, the last,
long run,
20,
for sure.
40 years, it's just been appreciating. So there's a lot of properties in the last, 10 years in my career that, I'd be a multi-millionaire right now if I would just held to all these properties. And I'm
Yeah.
sure I'm going to regret it in the future too with the properties that we're still
Currently doing, yeah.
But I mean,
doing.
hindsight's 2020, right? You make
Right.
the best decision that you can at the
Yeah.
time, and you move forward. That's actually one of the things that stalled me from getting into the market. I bought my first house in 2021, But I was ready since like 2019, and I was like, no, it's gonna crash. I'm not gonna pay higher prices in 2018.
Right.
And 2020 came around, and I was like, no, had I bought in 2019, and like lesson I learned is just buy when you're ready, and then just sit on it. And especially in Southern California, in the long run,
Exactly.
you'll be fine. Yeah, maybe next year they go down a little bit, you lose 3-5%, but if you're holding on to it in the long run, you'll be okay.
Exactly.
But yeah, so tell us about your second flip.
Well, I mean, I would just kind of do a quick, I guess the last 10 years. From there, you know, I brought it back to LA because the commute was just really bad, right? Going to Hesperia. So I stayed in LA, started making a lot more connections, networking with, with people, realtors, wholesalers, going to networking events, going to auctions. So, you know, did deals in South LA, kind of that was my hub in the area. That's kind of where I grew up as well. So I was very familiar with that sub area. And, you know, I just got a lot of experience. And then I would say around my fourth deal is when I started to get my, that lesson.
Pay for your lesson?
Pay for my lesson. Exactly. So, and again, it's one of those things where when I look back now, it was such an easy remedy or solution, right? That at the moment when you don't have a coach, you don't have a mentor, you don't have resources, you know, you have no idea what to do. So it was a very simple solution there. I could have just put a tenant in place. You know, again, this is a fix and flip. We have holding costs. You know, there was a situation there where the property would not sell. And so instead of me putting a tenant in place, holding off for the property for maybe a year and then putting it back in the market, I kind of went on a downward spiral. And again, you don't know what you don't know. And if you don't have resources or outlets to, you know, reach out to and ask for help, you know, this is kind of what happens. And so that was my my first experience, you know, dealing with a situation like that. But you know, and you know, in hindsight, again, it just, what doesn't kill you makes you stronger, right? Yeah. So now, when I look at situations that are, you know, with adversity, you know, we can handle them a lot easier, you know. And I think in some situations that we become, you know, stressed out, or there's a lot of anxiety, you ask like, how are you guys so calm, or how am I so calm? Yeah. Just from experience, right? So I've gone through those situations where I'm stressing out, I'm anxious, I have no idea what I'm gonna do. But eventually you come out on the other side, right? You figure it out and you keep moving forward, so that now that, you know, when there are adversities or situations, you know, last minute, you know, situations, you deal with them a lot calmer. You know, I have a philosophy that when you're doing good, right, that's when you kind of want to double down. So meaning when you have momentum, right, you double down on that. Yeah. And most people, what they do is they'll slow down. Right, they'll celebrate, or they'll take a break because things are going well. Right. For me, it's you double down on that momentum, because momentum is like a train, right? You know,
it's hard to build too.
It's hard to get that train going, but once it's going, it's hard to stop it as well.
Right. Yeah.
And the same goes for the other way around, though. When there's adversity or there's situations, that's when most people start to go more, but they dig themselves a bigger hole. And that's what I did when I was younger. Now, when there's adversity or there's situations, you know, what I do is I kind of take a step back. That's when I take time off to reflect, to kind of see, all right, how am I going to handle the situation, right? So that's my philosophy, you know, that I've kind of learned it the hard way, I suppose. So that's why when, you know, things come they may seem tough, you're like, why are you so calm? That's because I'm taking a step back to analyze the situation, versus, you know, panic and try to shoot everywhere like everybody else does.
And you said it best, right? It just comes down to experience. I mean, even from like shooting a free throw at the end of the basketball game. Exactly. You see Kobe, these guys that have practiced it millions of times, they're confident.
Correct.
Average Joe that hasn't done it, super nervous and will miss. So
correct.
That's exactly what it comes down to. But tell me how you went from flipping on your own to now partnering Luxum Capital.
Yeah, so, you know, like I mentioned, I had another business in 2011, family business. We sold it in 2020, and I took some time off to just kind of see, you know, what was my next chapter in my life. And it was non-real estate related. So when I sold that, you know, I always wanted to see, hey, what's my passion? So it came back to real estate. Started fixing flipping on my own again, and that's when I met Eric. And I've always had the idea of starting a fund, right? So when you do fix and flips, you either have to have your own capital, right? Or, you got to partner up with other individuals, right? And, for the most part, these are called either, joint ventures or syndications. Either way, on every deal that you get, you have to pitch that deal every single time to that capital partner or that investor. Right. So after you sell this deal, your partner gets some money back. You get a new deal. Now you got to pitch it again. So for me, it was like, it's a little bit exhausting having to pitch every single deal every single time.
Yeah. And can you kind of just for those that are new to this flipping game, someone that doesn't understand, can you kind of walk through what you mean by partnering and raising the money, and just break that down, like the finance aspect of it?
Let's use an example. If I'm buying a house for $500,000,
Okay.
with the idea that it's going to sell for $800,000,
Correct.
okay. Well, that acquisition, the $500,000, the purchase price, right? I need to come in with some type of down payment. Let's just use.
And so, like most people, down payment, they're thinking 3.5% or 5%.
Right.
But in the flipping game, it's a little different, right? It's a hard money loan. So tell us about that.
Correct. So, I mean, you could buy it all cash if you have it, or you use alternative loans that are more common, known as hard money loans. And so these hard money loans, for the most part, they require you to come in 10, 15, 20% down, sometimes even more. It depends on your relationship with the lender, right? The neat part about it is that they don't require a lot of the documentation that you are required when you're buying your primary residence. So when you're buying your primary residence, right, one, you have a much lower down payment if you're using something like FHA, right?
Correct.
3.5% down, but they want your W-2 forms, tax, pay stubs, bank statements, exactly, right? So credit score. When it comes to investment loans, right, because hard money loans are technically business loans. So these loans are not meant for your primary home. What they focus more are on two things: your experience, right? Also your track record, and the project itself. So how much are you buying it for? How much you're going to put into it? And what is your exit strategy? So based on those two things, what your track record is, what your experience is, and what the project looks like, they'll go ahead and provide you a loan. Right? So they don't need tax returns, they don't need W-2s, et cetera. You still need to have some type of good credit, right? So let's just use 20% as an example.
Okay.
Right? So I'm buying the property for $500,000 and I need to put 20% down.
So $100K off the bat.
Right off the bat, it's $100,000 versus $17,500 if I'm doing 3.5%.
Correct.
So it's a big difference. So assuming that you're starting off and you don't have $100,000, right? Well, now you got to find some type of partner, right? And so now this is where now you got to pitch the deal. Let's say I come to Eric and say, hey, Eric, I have this deal. It's $500,000. We got to put 20% down, and we got to put another, let's say, $100,000 in renovations, and we're looking to sell this for $800,000. So just based on those numbers, I'm in it for $600,000. Again, not counting anything else, there's a $200,000 profit, right? As an example. So now he has the capital, he has $100,000. So now we figure out some type of, split as far as what he gets and what I get, me for bringing the deal, me for doing all the work, the scope, and then, him just for providing the capital. So that's what I mean by partner.
Got it. Okay. Yeah, there's two things, right, with in flipping homes. One is finding the deal, two is funding the deal.
Correct.
Which is why usually you go 50-50. And on your side, you found the deal, you run the day-to-day construction, you make sure it gets sold. And on Eric's case, in this situation, he just brings in the money as a passive investor, and you guys come to an agreement, whatever it may be, 50-50. Once the property's sold, you guys both made money. So back to the fund idea, you got tired of finding an Eric every single time you had a house.
Correct.
So that's where you're.
So now the fund, it's more of a we get multiple capital partners basically to invest into the company. So now we put a pool or fund, right, where we raise X amount of money. Let's just say, as an example, $1 million. So now $1 million of capital is there where, let's say, I'm managing that fund of $1 million in order to do multiple deals, at a time. So now instead of me having to go, hey, I need 100K here, I need 100K there, and I'm doing one deal at a time, now I have to my disposal $1 million where I can go and just pull the trigger on a deal that I feel that is fit for our criteria.
And have multiple deals at the same time, scalability as well.
Exactly. So it's the process, it's a lot seamlessly because, again, I don't know when in the other side, right? If I'm doing per project, if I lock up a deal and I have, let's say, 2 weeks to close, right? I got to find that one person in 2 weeks to partner up with me.
For sure.
Right, which makes it a lot more stressful versus I already have the $1 million. I can just go ahead and pull the trigger. And makes it a lot easier with sellers as well because they know, hey, this is a strong company or this is a strong investor buyer that is going to be able to buy this. So I've had that idea for many years prior to meeting to Eric, but I do analyze sometimes a lot. Right, and they say analysis paralysis, and this is where Eric, I think, he
offsets you on that in that aspect.
He definitely offsets me in that aspect where, I pitched him the idea once.
Let's do it,
and he just said, "All right, let's do it. Why not?" So that's kind of how Luxum Capital came about. I had the concept, had the idea, I even had the name already, for 2 years, to the point where when I pitched it to him, he already thought that already existed, right?
Yeah.
Remember that?
Remember.
And then he goes, and then I said, okay, we got to open up LLC. He goes, wait, I thought you already had the company LLC. No. But again, that's what he, he was able to really push me to open up Luxum Capital. And that's where we started, Luxum Capital.
And so you guys started the fund and you guys started flipping properties, right? Correct me if I'm wrong, but you guys flipped around 12 properties in 2023?
Yeah. The first year. Yeah, first year was 12 properties. We were on a roll. Again, the market was hot at the time. Interest rates were still low. But the vision for Luxum Capital has always been, and was from the very beginning, that, we would have, get into multifamily, much bigger stuff. And eventually with the long-term goal of having, many doors under management. So that's always been the vision and the mission from the very beginning. And in the 2 years that we've been operating, we did the fix and flips for track record purposes, right? And now we've jumped into development, and with a new acquisition as well of a 24-unit apartment building. So everything that we've discussed, we've actually. We're on the right track.
Yeah, it's crazy.
Yeah, in 2 years.
Everything came to fruition, bro.
Yeah,
everything we talked about.
Yep.
Yeah. We started with fix and flips. We flipped our first multifamily, Selby, right? The triplex.
That's true.
Right, and then we went from that to ground up development projects, and then went from that to acquiring a 24-unit apartment building. So
there is that one. I think it's synergy is I don't know if that's what I want to call it, but when we say we're going to do something, we pull the trigger and we do it.
Yeah.
I mean, you have to believe it in your mind before it happens, right?
Yeah.
You hear all these famous people. I think it was Jim Carrey who used to write himself like a $1 million check or something, even when he was a lot younger. And you have to believe it in your mind.
Right.
You know what I mean? Before it comes through. But it's pretty amazing how far you guys have gotten in 2 years.
And now we're at a point where we brought you on board as our CFO. So he has a lot of good strengths. I have a lot of good strengths, but I believe we both have the same weaknesses.
Yeah.
That's your strength.
Yeah, for sure.
You know what I mean? So that I think that as a company, Luxum Capital, it just continues to get, better and better and stronger, more solidified than ever.
Yeah, I agree. And just touch a little bit on, you just mentioned what you're into now. So touch a little bit on the ground up developments, and then also you hinted at the apartment building that we just closed on. Yeah,
so as a company, we partnered up with other professional investors, developer, in a 5-unit development in Echo Park.
Okay.
And at the same time, they had an opportunity for another project in Mid City, which is a 6-unit development as well. And on both of those projects, we came in as a limited partner. And based off of, I guess, how quickly we were able to fund those deals, and also just building rapport with them. It's been a good amount of months now, getting to know them, building rapport, building relationship. They offered us the opportunity to be co-sponsors and GPs in the acquisitions of a $3.6 million apartment building, which again, it's our biggest acquisition up to date.
Yeah.
I think it's the first of many.
Yeah, and to touch on this a little bit, it's a 24-unit apartment building in Boyle Heights, but the game plan is kind of the same as your fix and flips. You're just doing it on a much larger scale. Yeah,
it's the same thing, and interestingly enough, I've done this in one of my small buildings. The building that we just acquired had 3 units that are vacant, and also tenants that are Section 8. There's a misconception, I believe, that Section 8 tenants are, you want to stay away from them.
Agreed.
I've heard that for so long, in this business. And now as a landlord myself, I think they're great tenants. The reason for it is because,
never late.
The rent's guaranteed, huh?
income, rent's guaranteed. The tenants are also, technically, they're responsible to make sure that, they're taking care of their end as well. Otherwise, they lose their voucher. So, there's always exceptions to that,
for sure,
to that rule. But for the most part, in certain areas, you'll have Section 8 tenants that do take care of their units a lot more because, they want to make sure that their voucher is not taken away.
Right.
Yeah. So for me, Section 8 tenants are, they're a no-brainer. Yeah. And so that's one of the appealing parts of this new acquisition is that we have 10 Section 8 tenants, 3 vacant units. Speaking to the tenants, they are already wanting to upgrade to the new upgraded units, which all that means is we're going to have to, get new vouchers
to bring their rent to market value.
Market value, exactly. And then just keep doing that. Keep doing that.
Musical chairs.
That's what I call it, musical chairs. And with that being said, the natural progression is that the rental income increases. Correct. Therefore, increasing the value of the building.
Exactly.
So just in short terms, that's kind of the strategy.
Yeah. If you don't mind touching on the numbers, I guess I could touch on the numbers. We acquired it for 3.6. I think with all the permits, constructions, because we're also adding some ADUs in there. We're still trying to decide either 4 or 6, but I think we're going to be all in 5.5, and we are looking to sell within 18 to 24 months at about 7.5.
That is correct. So these are projections. These are our targets. Obviously, nothing is set in stone, but sure. Those are the numbers. Yeah.
Awesome. And that's where Luxum Capital is at right now.
Biggest acquisition to date, $3.6 million apartment building. I've only been involved in real estate for 2 years. I don't know how, but one of the main things I can tell anybody out there that if you're looking to get involved in real estate, get around people that are going to push you to do bigger and bigger things every single day. If you're, the guy in your group of friends that's making the most money, guarantee you're comfortable because that's all you see. Once you get around people that make way more money than you, that are doing bigger things than you, that's when you get uncomfortable. And when you get uncomfortable is when you grow. So if you're out there watching on YouTube, you want to get involved in real estate investing, go to networking events, right? Get out there, get yourself out there, hang out with people that want to do that, basically have the results you want, right? Fuck your mom, fuck your dad, right? If they're not living the life you want to live, right? Then don't listen to them. Be around people that, like I said, really going to push you to do what you want to do. Because a lot of time, our friends and our family, steal your dreams.
Got to be comfortable being uncomfortable. That's how you grow.
Yeah. So, if I think about it, and I'm pretty sure if you think about it, every time that you leveled up in your life, right? You've been uncomfortable,
It's true.
right? So, and as well, I've every time I leveled up in my life, right? It's because I met somebody, right? So, like I said, I like this episode a lot. It kind of brought us to where Luxum Capital is at right now. For those of you who don't know what Luxum Capital is, we're a real estate fund. We out there, we help people, get involved in real estate, help you participate in deals that aren't really normally out there for people like our friends and family to participate in, right? For your average investor. So that's what we established Luxum Capital. So with that, if you guys want to learn more about real estate investing, you can go to our website, luxumcapital.com. Luis, if people want to, reach out to you on social media, where can they find you?
My Instagram, it's I need to confirm this, but I think it's LJ Vargas 11191 on Instagram.
Say that one more time.
LJ Vargas 11191.
Okay, and then David
M, CEO.
Awesome. And then you can find me at ATM King on Instagram. But with that, thank you guys for joining me. And we're going to call that an episode. If you guys got value out of this episode, subscribe, share it with somebody, right? But with that, we'll see you on the next episode of Money Talks.
Money talks, never stops, making moves, set a plot. What we do, never